Those numbers are typically quoted in nominal terms. The end of negative interest rates is particularly good for the Japanese financial sector, kind of like the European banks sort of getting left in the dust over the last 15 years, finally given their chance to perhaps have a seat at the table, at least to play the game with some of the other big high-quality financial institutions out there. I can still be reasonably constructive on Japanese equities given some of the macro backdrop while being a little bit concerned about the overall health of the Japanese economy. I think you can square that circle.
Can we just square it off back here in our home markets? I see Cathie Wood lightening up on TSMC, which is a global play in chips. You've got this huge momentum under the whole chip sector. When you see star investors or very well-known investors, depending on which way you look at this person, does that raise a flag about selling into strength, or does it say more about diversification and being nimble for this year?
I think the story is much more about diversification, much more about being nimble. I mean, we are very clearly in the early innings of what potentially may be a just transformative technological revolution.
Yeah.
I don't think it's going to happen over the next 6 to 12 months. I think we're really going to see the fruits of artificial intelligence in particular over the next 5, 10, 15 years and beyond. And I think if we are long-term investors, we have to harken back to the days of the early internet when the makers of the internet, so to speak, those companies that were actually laying the literal pipelines to support the infrastructure were the winners in the space. But you fast forward today, and the winners are very different. They're much more considered the takers, right? The ones that use that infrastructure to transform their business models or create entirely new business models. I think you're going to see something like that happen with artificial intelligence, where the tech makers, which would be those semi-producers at the moment, are doing quite well, fueling the development of this infrastructure. 10 to 15 years from now, Manus, it is very likely going to be a completely different ballgame. And I think investors have to be aware of that and properly diversify.
I am open to all robotic assistance in 10 to 15 years' time, Jack, when I'm on the beach, sur la plage, relaxing. Jack, thank you very much.
That was good.
I'll be in the metaverse. Coming up in 15 years' time, that is. Coming up. Government shutdown. You forgot about that, didn't you? It's looming.
I think the odds we avoid a shutdown in the short term are pretty good. I think what ends up happening here is that they kick the can for a week or two.
Counting down the negotiations with Anne-Marie Hordarn on everything on Capitol Hill. This is Bloomberg.
I think the odds we avoid a shutdown in the short term are pretty good. I think what ends up happening here is that they kick the can for a week or two with some more temporary spending to try to work out problems. There's also the optics, even for the Republican purists who are charging a lot of this. But the bigger question is this is going to bumble on for a month or more with the idea that by April 30th, there are mandatory 1% cuts if they can't come to a deal. So those same Republicans think their leverage grows.
Terry Haynes there speaking earlier with Bloomberg about the politics of a looming shutdown deadline. Now, the government is facing a partial shutdown Friday. That's March the 1st. That comes just 1 week before a full shutdown, which would kick in on March the 8th. President Biden is set to meet with the top congressional leaders. The effort to pressure the House Speaker, Mike Johnson, and his Republican Party to make a deal. Anne-Marie Hordern is tracking all events on Capitol Hill. She joins me now. We write that it's the Speaker who they're trying to cajole Anne-Marie to do a deal, but actually it's the long arm of Trump that they need to cajole, is it?
Well, look, there's a lot of individuals within the Republican Party, which Speaker Caucus's conference, that he needs to get in line to try to get a deal over the finish line, because the issue, of course, is if he decides to work with the Democrats and keep the government open, the next big question comes, will some of these issues and individuals in the far right of his party decide that they want to call a motion to vacate and try to get him out of his speakership job the same way they did to Speaker McCarthy? I think today will be an interesting meeting because potentially he'll be a bit more isolated. We know that Hakeem Jeffries, Senator McConnell, Senator Schumer, they all want to keep the government open. I think Speaker Johnson would also like to keep the government open. It's just the issue how he does it is there going to be the repercussions for him. But this is, remember, a partial government shutdown if we were to see one following Friday after midnight. The big issue would become March 8th. And Henrietta Treyz was on with us earlier, and she says there's an 80% chance that they would do some sort of deal and just kick the can down the road and have 2 new dates to look forward to for potential shutdown unless they get those 12 appropriation bills over the finish line.
But as you say to me yesterday, welcome to America. This is politics in America. 14 shutdowns since 1981, longest being 35 in 2018. I'm dangerous with a fact. But markets don't really sort of seem to care about this, but where they can very quickly pay attention is Biden. Optimistic yesterday. His rhetoric was optimistic around the possibility of a ceasefire between Israel and Hamas. When could that happen? How real is that? This comes down to the coalition of the willing in France yesterday.
Well, so Biden said yesterday that he was thinking Monday, and he said that this is some of the information that's being given to by National Security Advisor Jake Sullivan. He also was speaking to Seth Meyers late night last night and said that what he was, the indications he got was potentially we'd have something by Ramadan. That's March 10. So potentially sometime between next Monday and Sunday, you could see a hostage negotiation. But I look at what Netanyahu has said over the weekend, which is that he says Hamas's claims are delusional, and until Hamas gets more in line, they would not want to forgo with an agreement. You have to remember, Biden's comments came just before today in Michigan. We have a primary vote for the Democratic Party. Now, yes, Biden is going to win this primary, but there's a lot of individuals that are going to go out and potentially vote uncontested. They do not want, they are voting this way potentially to send a message to the White House that they want to see more being done to protect Palestinians in Gaza.
Okay, Anne-Marie, thank you very much for joining us. That's Anne-Marie Hordern with the very latest on Capitol Hill, counting down to a potential shutdown. Let's get your sector price action in under the hood. Abigail Doolittle is with me with, 22 minutes into the session. What have we got, Abby?
Interesting sector composition. We have the S&P 500 down slightly right now. The top sector, utilities, that is a defensive sector. Yields mix, so those dividends may look a little bit more attractive to investors. Consumer discretionary, real estate up there. Tech is the worst sector on the day. Not a large decline, down 0.4%, but of course there is a big weighting to the S&P 500 there. Let's take a look at a space that is really surging higher though, and that is the biotech space. The overall biotech ETF on the day, last time I looked, up more than 2%, and it still is about that high. Viking Therapeutics up 66%. This is now a roughly $6 billion market cap company. And you guessed it, it has to do with obesity drug results. They did a trial. I think it was a late stage trial, and it's pretty impressive. If we were to look at Eli Lilly and Novo Nordisk, we would actually see those shares down. So a new entrant, Manus, into these very popular obesity weight loss drugs.
Yeah, it's going to be a fiercely contested zone. It's going to be interesting to see where the pricing goes on that. Abby, thank you very much. Rounding up the sectors for you. I'll set your agenda for the rest of the week. And guess what? It's got a little bit of Fed speak in it. There you go. It's a beautiful day under the clouds in New York. Trading diary for you. What do you need to watch for the rest of the week? Consumer confidence data comes out at the top of the hour. The next team will bring that to you. Of course, it is about Fed speak. We are in full swing. Bostic, Collins and Williams. We'll hear from them today. Plus, we get the earnings from TJX and Salesforce. Thursday, pivotal piece of data, the Fed's preferred inflation gauge, PCE, and on Friday, the next potential government shutdown. We're counting down to that. Did you get that? Counting down to the shutdown? That was countdown to the open right here on Bloomberg. The retailers are delivering their numbers. Macy's is going for a full-scale restructuring, betting on the highlands of luxury to turn it around. Good morning from New York.
30 minutes into the U.S. trading day on this Tuesday, February 27th. Here are the top stories we're following. Retail revival. Shares of Macy's soaring after the company revealed its turnaround plans. The 150 locations set to close. We'll bring you comments from the company's C-suite. Still snacking. J.M. Smucker tops estimates in its first report since buying Hostess Brands. CEO Mark Smucker joins to discuss where the growth opportunities are. And investing in energy, a conversation on the death of E&P with Hank Sherman, the CEO of Tectonic Financial. That's our Wall Street Week Daily segment in just a bit. I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. You take a look at these markets right now, and there's not too much to say. The S&P 500, it is a hair higher to the tune of about 0.1% or so. The NASDAQ 100, your big tech benchmark, it's about the same story. Slightly higher on the day, up about 0.2%. And I threw the bond market up there. You take a look at the 10-year Treasury yield, also higher by about a basis point, hovering near its highs of the year, of course, as we count down to that Fed decision. But before we get there, breaking consumer confidence numbers crossing the terminal right now. Bloomberg's Mike McKee is standing by to break it all down.
Well, surprisingly, Katie, we have a little bit of a disappointment here from the Conference Board because we see consumer confidence go down a little bit, at least in terms of the headline number and the present situation. Well, basically all of them go down across the board there. Headline comes in at 106.7 after 110.9, and Conference Board present situation 147, down from 154.9, and Conference Board expectations 79.8 from 81.5. Now, people in the know watch the jobs numbers more in terms of the Conference Board, and we see fewer people thinking jobs are plentiful, 41.3%, and jobs hard to get rise a little bit to 13.5. Also, incomes, people think that their incomes won't be growing as much, 16.9% from 17.1. Those decreasing also fall, 11.3 from 12.5. So more people think their incomes are going to stay the same. Now, the basic number that everybody is going to want to see is, or at least those who are trying to make job guesses, is labor market differential, and that is the employment number, the difference between the jobs plentiful and the jobs not so plentiful number. It had been going up, going down a little bit now, but still higher than it was a couple of months ago. Remember, we got those big jobs numbers for December and January. This doesn't suggest we're going to see a major change, but it will figure into people's estimations for what we get a week from Friday. Remember, we talked about this.
Right, right.
It's not this Friday.
It's not this Friday, it's next Friday. And Mike McKee, I know that the answer is they're not so focused on a single print, but how do you think the Fed is receiving this? You think about the fears of sticky inflation here. Is it maybe good news that consumer confidence is coming down a little bit?
I suppose you could call it that, especially the idea that incomes won't be rising. People aren't counting on the fact that their paychecks are going to get bigger. But overall, the Fed, as I've said before, tends to watch what people do, not what they say. And we've seen plenty of instances where consumer confidence and sentiment is down, but people spend more money. So the Fed is kind of hoping that people keep spending, the economy stays strong, but wages and inflation don't rise because of that.
Absolutely. Well, Mike McKee, really appreciate your time, of course, breaking down those consumer confidence numbers. And on that note, I mean, we're keeping a close eye on the retail industry this morning because Macy's announcing it will close 150 stores over the next 3 years in a push towards luxury. Bloomberg's Romain Bostic, he spoke to the CEO earlier today. He's sitting right beside me. Yeah. Romain, what did the CEO have to say?
Yeah, Tony Spring, remember, he just took the mantle just a couple of weeks ago at the start of February here, but really wasting no time. He said this is basically the culmination of a 7-month diagnosis of their portfolio, and that diagnosis is they need fewer stores. Remember, this was a company that had something like 700 stores prior to the pandemic. That's down around 500 now. That's going to be reduced by another 150, but here's the real rub here. They're actually going to improve some of their other stores. So they did not specify how many Macy's stores would be closed, but it's pretty clear that a big chunk of this are going to be Macy's branded stores. They're going to increase, though, the number of Bloomingdale's stores stores, and they're going to increase the number of Bluemercury beauty product stores. And this is a big push. Remember, Tony Spring's background was at Bloomingdale's. He sees luxury as the future of this company, and he put it bluntly. He said, right now, the biggest contributions to Macy's going forward are going to come from two places, Bluemercury and Bloomingdale's.
And of course, we have a Bloomingdale's across the street, so there you go. So focus on luxury here. Of course, that's not the only thing that Macy's is thinking about its portfolio here. Did he have anything to say when it comes to some of the activist bids, activist investors involved with the company?
We did get a chance to ask him that question. He very politely dodged the question, saying that he wasn't going to comment on it. I did reach out to Ark House, which is one of the firms that has made a public proposal for the company. They declined to comment, saying that they are still trying to digest today's report, but they may have a comment in the future. We should point out, Katie, as you know, particularly with Ark House, they have much more of an interest in the real estate side of this business than in the retail side of this business. And they've made it clear that they see a lot more value there if Macy's is willing to be more aggressive on the real estate side.
So the fact that they're shutting down those locations, definitely an interesting story to follow. Bloomberg's Romaine Bostick, really appreciate your time and your reporting here. You take a look at Macy's right now, currently up about 7%, so shareholders clearly finding a lot to like. But let's continue this conversation now and take a deeper dive into the broader markets. We're going to do that with Joanne Feeney. She is partner and portfolio manager at Advisors Capital Management. She joins us now. And Joanne, let's start there with Macy's, this turnaround plan that the company announced, clearly finding a lot of buyers, at least when it comes to shares this morning. How are you thinking about it?
Yeah, Katie, good morning. You know, clearly Macy's has been challenged by the shifting wealth among different cohorts of the consumer. The lower-end consumer has been really challenged, and, you know, they're not necessarily low-end department store, not at all, but, you know, that lower to middle range consumer has been really pressured by inflation, and they've been seeing that at the Macy's store, so I applaud them for trying to shift the mix towards more the Bloomingdale's, towards the higher end, and towards beauty products with the Bluemercury line. So that makes a lot of sense to us. So we're not owners of Macy's. We prefer some other ways to really invest in where the consumer is going, what they've been struggling with, and we can talk about those if you like. But Macy's seems to be making a good move here towards where the consumer is.
Well, let's talk a little bit more about where you see the consumer going. Is it luxury? Is it somewhere else?
Yeah, so we think the consumer is not a homogeneous group of people, right? So you've got the lower end to middle range consumer really struggling with inflation and the pressures on their budgets, and they are becoming more practical in how they spend their money, shopping at places like TJ Maxx. So that's one of our positions, or a Target, which aside from its bump in the road from some cultural problems that they ran into, is in the right part of the market for the consumer that's trying to save money. And then you have the consumers that have plenty of money, that aren't really worried about inflation. They're in the upper middle class to even higher, and they're the ones shopping at, say, a Bloomingdale's or at some of the luxury brands. And we think those will continue to do well. Now, it looks to us like the economy's in pretty good shape. We've still got a lot more people employed than we had before. So overall, consumer budgets in aggregate are pretty healthy, and that's why consumer spending has been so strong, and that's why inflation has continued to be a little bit more persistent than what the Fed would like to see.
Well, Joanne, I almost shudder to say this, but it sounds like when it comes to the retail industry, you're taking a barbell approach here.
I think that's what one needs to do in this kind of a market. We're not so enthusiastic about playing at the higher end either. We think there are other ways to play the higher end consumer. We like Amazon, for example, because we do still see that shift over to e-commerce continuing. It was the big story for a number of years, and people are sort of forgetting that the switch is continuing, that the mix is still shifting towards e-commerce away from brick and mortar, which is another challenge, obviously, that Macy's is facing. And so we think Amazon is a good way to play consumer more broadly, and then lower end, we like McDonald's, we like TJ Maxx, because we do see those budgets continuing to be constrained for a big chunk of the consumer out there.
Yeah, it's pretty amazing. I do so much of my shopping on Amazon. Even if I try something on or see something in person, I'm probably going to buy it on Amazon. But talk to us a little bit more about TJ Maxx. Of course, TJX reporting earnings tomorrow. Those are expected to arrive around 9:30 in the morning. What specifically are you looking for?
You know, TJ Maxx has a great suite of different types of stores, but their flagship TJ Maxx obviously is a favorite for bargain hunters. and they have high quality products in those stores. Now, it's obviously hit or miss depending on the inventory they get, but they benefit from two sources. One, if Macy's is struggling, then they are not selling everything they have, and that dumps into inventory that TJ Maxx can pick up on the cheap. And then they turn around and sell it to their bargain hunting shoppers. So it's a favorite place to go to get high quality products at off-label prices, mainstream prices, and so that's a real advantage for a lot of the consumers out there, and we think that it continues. So they have an advantage there, and therefore they do well in recessions, for example, when consumers are being more frugal. But they also do pretty well throughout the cycle because they carry high-quality products.
And let's couch this conversation over what we've seen over the past couple years, especially when it comes to the pricing strategies of some of these retailers. It seemed like for a while these retailers in general were focusing on price over volume, not just when we're talking about clothes, but also consumer goods, foods, etc. And now at this point, I mean, you think about all the price hikes that consumers have accepted up to this point. Do you think that pricing power still exists?
Yeah, I think they're running out of pricing power. And we're hearing that from different retailers. And we're hearing that really across the board in all of the different segments. I mean, consumers only have so much that they can really afford to spend. And so, that's part of the whole picture of why inflation is slowing down. Is because you can only push so many price increases onto consumers. And so what companies are doing instead is they're trying to cut costs. They're trying to preserve their margins, knowing they can't continue to increase prices. And so they're going now at it from the other end by trying to limit costs. And they're doing that by technology changes that save them on labor. For example, you walk into a McDonald's, it's touch screen as opposed to having to talk to somebody to put your order in. That saves them on people. And so we're seeing that method to preserving margins, which is ultimately a good thing for the longer term for these companies.
All right, Joanne, sit tight. We're going to come back to you, a lot more to discuss. But let's take a quick look at what's moving underneath the markets right now. The single stock stories with Bloomberg's Emily Grafeo. Tell me about Zoom, because I can't seem to stop using Zoom.
Well, you're not the only one. Zoom is really trying to pivot from a COVID-era kind of company to one that really caters to enterprise customers. And at least their most recent earnings report showed that they are having some success in that. Their enterprise revenue increased 4.9% to $663.3 million in the most recent quarter. And they also said they had 220,000 corporate customers at the end of the quarter. This is in a bid to really compete with Microsoft and other video conferencing software companies that do cater to corporations. And overall, the earnings were pretty strong. The EPS guidance beat. The fourth quarter revenue was better than expected. They also announced a $1.5 billion share buyback program. They have a lot of cash over there at Zoom.
People really like share buybacks this season. And just a note to the audience here, Emily and I actually sit back to back, and we'll often be on Zoom calls together where we're in each other's backgrounds. It's very futuristic.
You have to blur the background.
I never do. Tell me about Coinbase, though, another big mover this morning, but this is pretty much all about Bitcoin.
It really is. This was the first time that we saw Bitcoin top 57,000 US dollars since 2021, and this is often a rising tide lift all boats. We see Bitcoin move higher, and then we see Coinbase and other crypto-linked stocks. So not just the exchanges, but we also saw MicroStrategy, Marathon Digital, Riot, all moving higher this morning. But Coinbase now in the last 2 days up over 20%. Is there an exact reason why today we're seeing Bitcoin up over 5%? I'm not exactly sure. I don't know if anyone can really ascribe a reason to this optimism.
I'm just going to call it FOMO and leave it at that. A lot of people chasing gains here. At least that's what it looks like. But okay, so we've gotten through Coinbase, we've gotten through Zoom. Tell me about Lowe's, because this was lower pre-market, but definitely rebounding now.
That's right. Yeah, it was lower in the pre-market. Now it's up about 3% in the regular session. I mean, the earnings per share were better than expected, so perhaps that's what investors are focused on. But overall, it did kind of paint a bleak picture for Lowe's. The company said that sales are going to fall further this year as consumers are really holding off on home improvement projects amid higher mortgage rates. If they have to pay an 8% mortgage, they're likely not going to pay for a bathroom renovation. But this was a similar story for Home Depot, which reported last week that the sales are going to fall. So perhaps investors are kind of brushing off these concerns. This is a normal course of business for a company like Lowe's that's so tied to the macro environment. But yeah, that stock is higher now.
Yeah, to the tune of about 3% or so, definitely brushing off those concerns. Bloomberg's Emily Grafeo, thank you so much. Now coming up, the sweet sound of snacking. J.M. Smucker reporting better than expected earnings. We'll speak to Mark Smucker, the J.M. Smucker Chairman, President, and CEO later this hour. This is Bloomberg. All right, let's welcome back now Joanne Feeney, partner and portfolio manager at Advisors Capital Management. And Joanne, so far we've talked a lot about retailers, that barbell approach you want to take, the high end, the low end. Let's broaden out this conversation a little bit, because I'm taking a look at your notes and you're right. I mean, you take a look at industrials and healthcare, they're just not attracting the buzz. Why do you think that is?
Well, I think last year was a really tough year for both those segments because of the rise in interest rates, which made the cost of doing business just considerably higher. So a lot of projects got delayed, a lot of spending really got pushed out in both sectors. And so now that headwind is likely behind them. In fact, eventually, we think interest rates will come down. And so when you look at the data from last year for, say, the healthcare sector, their earnings fell in the S&P 500, fell like 21%. Now this year, earnings are expected to rise around 16 or 17%. So you have a pretty big turnaround. Part of the reason is because those companies spent a lot of last year investing in reducing their costs, clearing out inventories that had built up. And so this year, they're in a much healthier place. And so if you even get a little bit of improvement on the cost and demand side, you're going to see a fair bit of uplift. Now, some of that has already shown up in the stocks. The end of last year, when it first became clear that the Fed was done raising interest rates, we did get a rally. But we don't think we're done yet. We think there's still a lot more room for the broader group to outperform this year.
Well, I want to talk about healthcare a little bit more, because I find it fascinating that there's been so much buzz around GLP-1s, around weight loss drugs. You take a look at the performance of the sector overall, only up about 0.3% for the entirety of 2023. I mean, how are you thinking about some of the big disruptive themes going on in the healthcare industry as an investor who maybe isn't that specific when it comes to following just GLP-1 and investing in those names?
Yeah, that's certainly gotten a lot of attention. And it's very specific to just a few companies. The concern there, right, is if you own these and then there's a third or fourth player that comes through with a pill form of the GLP-1s that could, massively change investors' view of the current winners. So it's riskier, I think, than people realize to try to play what has now become the current group of winners because of future innovation that's likely coming. But, what we like in healthcare is to be a bit more diversified than that. So not only do you have the exit from the pandemic, which was incredibly disruptive with all the vaccine production, with the viral treatment production that affected lots of companies, and now just coming to the end of that and all the extra cash flow that generated has left a number of companies in a really good place to further innovate or to do M&A. So you've got pharmaceuticals you can play into, but then you also have the disruption in the medical device and analytical tool makers like a Thermo Fisher or a Danaher in bioprocessing. Those companies really got hurt because of how spending was disrupted over the course of this multi-year pandemic, and those too are an opportunity now for a return to normalcy. So you've got analytical tools, medical devices like Medtronic we like, as well as the basic pharmas that really were hurt because of the evolution of interest rates and the disruption in spending.
And Joanne, I agree. The M&A story, specifically when it comes to healthcare, if the FTC allows it, will be really interesting to watch. But you made an interesting point that when it comes to GLP-1s, it's risky to try to play the winners here because there's the risk of future innovation that could come and, of course, disrupt things once again. Does that same logic apply to AI?
Yeah, Katie, that's a really great observation to make at this point. Obviously, NVIDIA is clearly the winner in terms of providing these specialized chips, accelerator chips, to enable the training and largely the inference that's needed to apply artificial intelligence models. Now, when you dig into the possibilities for disruption there, though, there's a lot more information. We understand a lot more about how a company can design and then ultimately have manufactured these very specialized chips. So AMD is going to be the next main competitor for NVIDIA. And then separately, you have some internally designed chips from, say, a Google in combination with Broadcom. Those chips are already being used. But it's pretty hard to imagine how you can get a major disruption in short order on the chip side of that world. So NVIDIA does seem to have this locked up for a little while. We do expect AMD to gain some share as they roll out their specialized chips over the course of this year. And then we do expect some internal development to continue to nibble away. But the essence of it there is that the pie is growing so rapidly that even if you have internal development like at Google and Broadcom, and AMD taking share, there's still an awful lot of growth for NVIDIA to continue to enjoy, as well as AMD. So we own both of those, for example, in our growth strategy, and we've owned them for a long time because we see just a duration of growth that is really hard to find elsewhere in the market, even among infotech stocks.
Right, yeah, those picks and shovels, the way to play that theme right now. And that first mover advantage for NVIDIA, it's not going away anytime soon. Joanne, really enjoyed this conversation, covered a lot of ground. That is Joanne Feeney. She is partner and portfolio manager at Advisors Capital Management. Now, still ahead, we're going to take a look at the companies making the most social buzz today. That's in our Social Climber segment. Up next, this is Bloomberg. All right, time now for Social Climbers. Look at the stocks making waves on social media this morning. And first up, Expedia cutting 1,500 jobs, or about 9% of its workforce. Earlier this month, the online travel company reported disappointing holiday results and issued a weaker than expected outlook for the current quarter. Now, next up, we're taking a look at grocery giant Albertsons. The Federal Trade Commission is suing to block the $25 billion deal between Albertsons and Kroger. The FTC says that the merger will lead to higher prices, store closures, and job losses. And finally, you also have Altice making the social rounds today. Bloomberg has learned that Charter Communications exploring a takeover of the cable provider. It's unclear whether a formal approach has been made. Of course, we're going to continue to follow that one. And you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Now, coming up on the program, food giant J.M. Smucker tops estimates in its first earnings report since acquiring Hostess Brands. We're going to be speaking with Mark Smucker, the company's CEO, up next. This is Bloomberg. Well, shares of the Jif peanut butter maker J.M. Smucker higher today after beating earnings estimates thanks to strong demand for its pet food and pantry staples. For more on these results, we're joined by Diana Rosero Pena, Bloomberg Intelligence Research Analyst. And Diana, of course, this was their first earnings report since they acquired Hostess. How is the integration going so far?
Well, it seems to be going well. Volumes are at 4% increase on the legacy business. So that is pretty fantastic for the industry because